Thank you, Jim. Chairman, Assembly members, thank you for having us here this afternoon. And yes, I would like to just speak on two aspects, really, of the business plan today. Firstly, how we put the business plan together. And secondly, to bring some clarity on some kind of areas of, I think, miscommunication, particularly related to high-speed rail around the world and high-speed rail in California. So firstly, how we put this business plan together. We worked about 6 or 7 months putting this together as a team. You requested transparency, you requested the truth. I believe this business plan is based on fair and reasonable and possibly somewhat conservative assumptions and figures. But I felt strongly that that is what we needed. We needed to know what the truth was, and that is what you have received in the business plan. Please consider that we here in the United States, and this is maybe one of my big shockers, do not have a lot of experts, and I mean that as the population. The population of the United States do not have a lot of experts in rail, high-speed rail. That expertise is very, very limited. Many are quick to comment, but they lack the understanding of how high-speed rail actually works, and for that reason, to some extent, the business case of the High-Speed Rail Authority, how it works, how it should be built, and how it should be funded. We have used high-speed rail experts throughout the process of putting this high-speed rail business plan together. I've ensured that we used some of the best high-speed rail competencies available in the United States, and in fact, through some of our consultants, Parsons Brinckerhoff and KPMG, we have experts in our team that built and were involved in the UK, in Holland, in Spain, in Taiwan, in China, and some of these candidates, and in France, and some of these candidates worked in those projects for 10 to 15 years and actually built those projects. So these people really understand what high-speed rail is about, apart from my humble knowledge of high-speed rail that I gathered over the years where I have been working and also been in charge of high-speed rail projects. We've made full use of our international cooperation agreements. We have 9 such agreements with all the countries in the world that operate high-speed rail systems: Belgium, China, France, Germany, Italy, Spain, Japan, South Korea, and the UK. In fact, when I came on board just nearly a year and a half ago, I made sure that we made extensive use of those resources and ensured that we kept contact with those authorities through the embassies and consulates. These people understand the real benefits of high-speed rail, and just as a matter of information for the public as well, in just the last 3 years, between 2008 and 2011, the operational fleet of high-speed rail trains in the world grew by 45%, from 1,737 trains to 2,517 trains. So this is a fast expanding market in the world because of its need and attractiveness. So I would now just like to spend a few minutes on bringing some clarity on some issues that really are misinformation, and they are constantly being used, and we read and hear about them over and over again. The first is the statement that all high-speed rail systems in the world operate at a profit. Let us not continue to argue this issue. The UIC, or the International Union of Railroads, has very clearly confirmed this. Many operators of high-speed rail in the world are private companies or even listed companies, and you can see them. They make profits. They are private listed companies, like in Japan they're listed. They're private companies in many parts of the world too. And as operators of either the rolling stock, the actual operations, or even operators of the infrastructure, they're infrastructure operators as well. High-speed rail is a very interesting investment possibility around the world, clearly needing public investment to start them and to invest and pay for a lot of the infrastructure. But generating cash as far as operating profits are concerned. This is a report, it's actually part of the business plan from the UIC, which also specifies and clears that situation, that high-speed rail is profitable everywhere in the world. By the way, just a statement, that includes even Taiwan. And personally, I was involved in the Taiwan project. But even in Taiwan, from year one, Taiwan generated an operating profit. Taiwan, the private investors in Taiwan, took on a huge amount of the complete project debt, and they were not for a while able to service that debt. But in the meanwhile, they're even servicing the debt of that infrastructure funding that they're doing as well. The second point is, let us not always compare California high-speed rail to the Northeast Corridor Acela Express system. There is no comparison. The Amtrak Acela system is not typically a high-speed rail system. It shares the nation's most congested rail corridor. It operates on an average at 60 to 80 miles per hour, compared to the average of 140 to 160 miles an hour that we would be operating, which is more than double the speed of the Acela Express. And they are limited to 20 trains. Thus, they were not able to offer either the travel times, nor the train frequencies that you require to create highly competitive downtown to downtown services, especially as an alternate to air transportation. It is for this reason that Amtrak would like to invest another $117 billion in 2010 dollars, which, if you expand that, it's $200 billion in year of expenditure, to upgrade its 426 miles of alignment over the next 30 years. And that is an upgrade, that is not a new build. However, let us not understate their success. Even with this very low 3 million ridership that they have in the Acela Express per annum, limited by the restrictions I've just mentioned to you, they too operate at an operating profit. The Acela Express cost recovery ratio for the fiscal year 2010 was 142%. That means they made 42% more revenue than their costs. And in the first 8 months of 2011, they run at 156%, so 56% higher than the costs that they generate. Thereby, they subsidize many of the other loss-making sections within the country. I would also like to say that there are some statements that are being made about ridership, and I know that Mike Rossi is going to talk a lot more about ridership, and the possibility or impossibility of having ridership numbers that equate to the population of the corridors. This is very common. In fact, the figures that we have in California are low compared to the ratio of population to ridership that is seen in other corridors in the world, where these ratios are much higher. I'd like to then say one or two words on phased implementation. You will notice that one of the main things that we have described in our business plan is the aspect of phased implementation, as well as the concept of working towards initial operating section. And this is the way to go. In fact, so is the way with the blended system, which will be discussed by Jim later on again. Blended system being for the bookends or the ends of the line. This is the way the experts in the rest of the world have implemented most of the high-speed rail systems in other countries. The line from Paris to Lyon is 270 miles. And by the way, Lyon is a little city. It was a city of 800,000 people. While the line from Madrid to Seville, Madrid is a city of about 4 million, Seville is a city of 1 million, and the distance between the two is 490 miles. Seville being a small coastal town of 1 million people. Those two lines were the IOSs, the initial operating sections, for Spain and France. They led to the most well-known TGV system in France, which grew out of that first 290 miles, and today the whole country is netted together with high-speed rail, and they continue in the way of PPPs to expand their network in the country. The same with Spain. After having built Madrid, Seville, they expanded the rest of the country and is now the biggest system in Europe. The decision for the Central Valley that was the right decision to build high-speed rail, to start the construction, not as a standalone high-speed rail line, no, but to start the construction to work towards the IOS, or the initial operating section. It's also the place where we will have the ability to test at up to 250 miles an hour the first trains ever to be built in the United States of America, the first power systems to be built in the United States of America, the first signaling, control, and rail systems to be built to operate at 220 miles an hour, to be tested at 250 miles an hour. Every country needs to have a system like that, a place like that to test, and the Central Valley offers that to us. It's the only place in our alignment that will offer us that facility too. One more statement before I hand on to my board members, and that is the right time to bring on private investors. Again, I can tell you from the projects I have worked on around the world, and in particular the high-speed rail projects around the world, where a lot of PPP, as we call it, or public-private partnership, is common and normal. It is a matter of looking at them closely. The models used in Japan and the UK were different to the models used in, say, Spain or France. But they all started with a public investment that started these projects, and then as one gets closer to a revenue-generating stream, that is when you bring on the private sector. We have done that in our business plan. It is comparative with the systems around the world, and there is, for a system as huge as a Californian high-speed rail system, and this being the first in our country, there is no shortcut to the solution. This is the way these projects are built around the world, and this is the way they are funded around the world. So with that introduction on why and how we got to these particular aspects of the business plan, I want to hand on to the two board members. And in particular, I'd like to say how pleased I was, because as much as I had a good team of international experts and local people putting together the plan, it was very encouraging to have very aggressive board members who came in and reviewed this plan. And I am really encouraged by the fact that we have this board and these members that have spent so much time to go in depth into our business plan, and to, it was really, really a deep dive. And I'm glad they're here today to explain to you what they found and how they see the business plan. And I think that's the best testament that you'll get to our business plan today. So with that, I would like to hand over to Dan Richard.
Mr. Richard, as you begin, I'm going to be a real stickler on time today, so we can get everybody have an opportunity. Just to let you know, you've got 15 minutes left for this presentation.
So that gives me 13 and Rossi 2 then. Is that, I understand.
That's what happens when you're the youngest.
It does sound like one. Thank you, Mr. Chairman. My watch just stopped, but I have a view of the clock there, so we'll respect that. Mr. Chairman and members, thank you very much for this opportunity. I am Dan Richard, member of the High-Speed Rail Authority, and let me just quickly jump to a number of points that I wanted to make about the plan itself and what it represents. First of all, I think it's very important that we emphasize to you that this plan represents a significant departure for the High-Speed Rail Authority, and it's a departure in several different ways. First of all, I think there's been a fundamental philosophical shift away from the notion that high-speed rail in California was going to be a separate, standalone system, more or less imposed on the map of the state without regard or much regard to how it interacted with the existing systems that we have in California. And we actually have a successful and growing network of rail systems, not just systems like BART, Caltrain, the ACE train, and so forth, Capital Corridor. But this business plan builds on a philosophy that high-speed rail must be integrated into the rail network that we have, to leverage off of not just the assets, but the expertise and experience of our existing rail operators. And that's, of course, very important here on the peninsula. My colleague Jim Hartnett is going to go into detail about that. The second thing is that, as Roelof vanArk said, we are very committed in this business plan draft document to provide you with real numbers. Real numbers about the capital cost, real numbers about the operating costs, to the best of our ability, real numbers about the ridership and other aspects of this, so that you as policymakers can make the appropriate decisions going forward. And I want to point out that part of that, to our detriment in the public relations sphere, is that we present numbers to you both in terms of 2010 constant dollars, which allows you to compare this business plan draft with earlier business plans, but also to look at what the true cost is going to be over the next generation of building this. And that means using inflated dollars, and that's where the very high numbers come from, because we talk about construction that's going to occur far into the future. And let me say on that, Roelof used the term conservative. My colleague Mike Rossi likes to use the term reasonable assumptions, but our inflation rate, just to give you one example, of 3% a year is significantly higher than our recent experience and probably what will be the experience the next few years. If you use the last 3 years' inflation rate for the next 3 years and then jumped to 3% after that, immediately $5 billion would come off the cost. So the inflationary effects are very significant here, but again, as you make your decisions, we wanted to let you see those numbers as they will play out over time for the cost of the system. The key element of the business plan is this notion of a phased approach of the high-speed rail system construction. Recently I had a chance to meet with the representatives of Japan, both the government and also Japan Rail, the private operator of the Japanese system. And what I hadn't really fully appreciated was that they opened their first line in 1964 in the Shinkansen bullet train system. They've really never stopped building since that time. And they continue to open additional trunk and regional lines. And so this has been a long-term commitment on the part of that country to expanding their high-speed rail networks. And really that's the path that we would go down here. So we have the initial construction segment, which we could start on as early as next fall, and that would build up to 130 miles of this track in the Central Valley that Roelof was just discussing. I'll come back to that in a moment. That becomes the spine or the foundation for the high-speed rail system. After that, our next step is the one that we really ask you to focus on as the crucial step, and that is when we put the initial operating segment into being. Now, the initial operating segment could be one of two choices that the authority will make sometime over the next couple of years, and that is either to build the initial operating segment from the valley south to the gateway to Los Angeles, or from the valley north to the San Jose area and the gateway to the San Francisco Bay. It would either go from Bakersfield to San Jose, or it will go from Merced to somewhere in the San Fernando Valley. That initial operating segment would have an as-built cost, and we believe it could be done so that it's in service by 2021, assuming that funding is available. And that would have an as-built cost of roughly $30 billion. But it would bring high-speed rail to California, and it would bring high-speed rail to America, and it would serve millions and millions of people. And it would operate with a net operating profit, as Roelof was just describing. What that initial operating segment will do is trigger the build-out of the rest of the high-speed rail system, both by establishing ridership and also bringing in private investment to help build out further segments. After the initial operating segment, the next leg would then be to connect the San Francisco Bay Area with the Los Angeles Basin, and then we would push on in further to the city centers after that. Now, the numbers here are very large, and there's no question about that. But it's important to try to keep them in perspective. First of all, as I've said, we're talking about numbers here associated with a project to be built over the next 20 to 25 years. And very few infrastructure projects are presented to the public in that fashion, where we're really looking at what the entire build-out cost would be. Second, and crucially important, these are not all public dollars that we're talking about, because we do estimate that we will have a significant amount of private sector capital coming in. And let me also say, this would be a true public-private partnership, because there would be very active private sector participation throughout the life of this project. In the early years, the private sector will be involved in the design build of the first sections. In later years, the private sector will be involved in operation and maintenance of the system, similar to what's been done in Europe and Japan and elsewhere. Beyond that, we actually see the opportunity for true public-private partnerships where private dollars can come in for both the design, build, finance, construction, and operation of the system. So we have very robust plans for private sector involvement. And one of the things I want to say about that is, one of the aspects of the business plan as well is that we've tried to respond to critiques and criticisms that have come from a number of different quarters. One of those important voices that has been critical of some of the plans in the past has been from your own peer review committee that the legislature has established. And one of their primary concerns was that there was no fundamental business model for the high-speed rail authority. I think with this notion now that we're going to follow the path that's been laid out with other successful high-speed rail systems of public dollars providing the foundation and then private dollars coming in after that, is something that's both responsive to those concerns and a reasonable and effective way to go forward. Finally, I want to say that in keeping the large dollar numbers in perspective, we do talk in the report about the alternative costs. And for too long, high-speed rail has been viewed by some, I think, as a question of a luxury decision that we could make in California. Do we build this system or not? Wouldn't it be great to have these cool, fast trains running? But in fact, we would urge you in your capacity as decision makers to look at the broader question. With whatever population figures you use, and we use very conservative population growth figures, our state is going to be growing. I'm always amazed when I open up and see an editorial about how we're building a train to nowhere. The Central Valley of California has 4.2 million people in it, according to the 2010 census. That would put it ranked 26th among the 50 states of the United States. So serving that population serves more people than live in about half the states in the United States. It is anything but a place we could call nowhere. And I came onto this board as somewhat of a skeptic about the decision to start in the Central Valley, and I'd heard all these voices saying that's the wrong thing to do. In addition to the technical reasons that Mr. vanArk gave you, I've come to believe that it's the right place to start for a couple of other reasons. One is that we get more track per dollar there than any other place that we would build. So we are able to use our initial dollars to secure as much track miles as we could. Secondly, precisely because, as Mr. Hartnett will talk about, we're looking now at this blended approach, it's the one area of the state where we really don't have an existing rail operation that we can integrate with and build on. And so acquiring that right-of-way is very, very important, and that right-of-way will have lasting value. So let me just end with this before I turn it over to Mr. Rossi. Jim Hartnett mentioned my service on the BART board. One of the things I learned in looking back at the history of BART, long before I ever was involved with it, was that the decision to build BART also was a very difficult public policy decision that had many of the attributes that this decision has. And people looked at that and they said, well, it's going to be expensive, technically can we do it, it has a lot of risk, et cetera, et cetera. As you know, several counties dropped out of that, and it came down to one vote by one county supervisor in Contra Costa in the 1960s. And that one person basically became the person who decided whether or not BART was going to be built for the Bay Area. Now, 50 years later, we look back on that decision, and it certainly has transformed both the way we live and has provided an economic engine. So these decisions are crucially important, and it's very hard to know as Steve Jobs said, how to connect the dots looking forward, but we can connect them looking backwards. So with that, I'll stop at this point, turn it over to my colleagues, but we appreciate the opportunity to appear before you today. Thank you.
We have 2 minutes left. I'll give you a minute each.
So I,
That's the problem. I took my glasses off.
yeah,
I wasn't
great.
watching.
Here's the deal. One of the other things that people talk all the time about is the model. And there are a whole series of things we can discuss with the model, but not in a minute. So I'm going to just leave you with this. I've spoken to the representatives of CARD, who I've been speaking to regularly and have great respect for. And this morning I spoke to Dr. Matanet of the Berkeley Institute, talking about his 4 slides and what his 2 issues were. He and I have agreed, and you can check, I don't want to put words in his mouth, but the view is that his second point doesn't dramatically speak to the issue of the gross numbers for ridership. In the case of the first issue, we are dealing with that issue. We felt we have dealt with it in the model. The chairman of the peer review group, Dr. Koppelman, has said that as we work through the validation, we will be able to see exactly what that impact is by changing the theoretical approach to that issue. We will do that at the end of this next refinement cycle.
Louder.
Can you hear me? I'm sorry. And that we will work through those issues. But it is our belief that at the end of the day, they will not dramatically change the numbers. Having said that, however, I'll just point you to the one section of the ridership chapter and the revenue chapter that talks about break-even. If, in fact, you look at the break-even numbers for 2026, what you will find is that this model would have to be off 83% for us not to make our numbers on a break-even basis. That's pretty robust in the issue of how conservative those ridership numbers are. And the final thing I'd tell you about looking at population ridership ratios that Roelof mentioned a while ago, if you look at the six countries that we have the data for, and you look at their population, ridership to population ratio, on average it's 1.8. When you take out the outliers, which is the highest and the lowest, it's 1.7. In 2030 for California high-speed rail, it's 1.05, and in 2040, it's 1.29, significantly below the international averages. There are a number of other things we could talk about, but I will cede the next 30 seconds to Jim.